Well, I think when you look at some of the indicators, I sort of understand why he gets there. The yield curve historically has been a great signal of a recession. Right now, we believe there's some interesting dynamics which are impacting it. And primarily, it's the fact that the long end is falling because the industrial data is slowing, but also because there is a global overseas reach for yield. So someone in Germany or Japan is coming to the U.S. to get yield in their portfolio, and that is sort of suppressing the long end of the curve. So the curve may not be the best indicator in terms of recessionary risk. When we look around the spectrum, ISM is still healthy. The consumer looks great. So it's partly an indicator, but there's a whole lot of things to look at, and all those should be taken into context together.
We talk a lot about the consumer. 70% of GDP is tied to consumer spending activity. Could the consumer actually prevent a recession?
Certainly, absolutely. And being that big of a portion, I mean, when you and I go out to the mall, there's still people in the store shopping. When we go out to dinner, there's still people eating at restaurants. It remains very healthy. And we're at a point in the cycle where people are being pulled in from the labor market who weren't in the job market before. That means people are getting raises and more people are getting employed. So it makes the consumer look even healthier as we continue to move on in this cycle.
I feel like your outlook is a little rosier than what we've heard from other people recently. What would you be advising clients, investors, people that are trying to make smart decisions with their money when there's so much uncertainty?
Well, so longer term, we remain quite optimistic because we're not heading into a recession. We don't see that as an issue at the moment. In the intermediate term, so let's say over the next 1 to 2 years, to Ray's point, the deceleration in the industrial data makes it difficult for stocks to do well over that time frame. So for those people with a longer horizon, I think it's a great opportunity. For those people looking over the next 1 to 2 years, I think we need to see the industrial economic data, ISM manufacturing, industrial production. We need to see that stabilize first, and we're not seeing that right now.